Hello guys, welcome to our channel. Today in this video, we will discuss if the USA is going to ban XRP soon. Big news for XRP holders. But before we start, make sure to give this video a big thumbs up, and if you are new to the channel, don't forget to subscribe before leaving. Also, hit that bell icon so that you can get notified whenever we will upload a new video. For now, let's get back to the video straight away. As the tragic events in Ukraine unfold, the international community has agreed to ban Russia from SWIFT, which led to many questions to the role of cryptocurrencies in keeping Russia's war machine and economy afloat. Ripple's XRP comes to mind as a potential substitute not only for its overall popularity in the crypto space, but also because it is fast and cheap to settle, unlike Bitcoin. For that reason, Ripple Chief Executive Brad Garlighouse and the RippleNet General Manager, Ashish Birla, went to Twitter to clarify the role of XRP in RippleNet. Ripple CEO Garlighouse said, "To clear any confusion, RippleNet, while being able to do much more than just messaging a la SWIFT, abides by international law and OFAC sanctions. Period. Full stop." He also pointed to Ashish Birla's thread, where he lays out the reality of crypto and blockchain's role, or lack thereof, to evade global sanctions. The full transcript of Ashish Birla's Twitter thread are, "In the last few days, we've seen some say that Russia could potentially evade sanctions and get around SWIFT using crypto. Number 1, crypto is only becoming more easily trackable by software and governments. Number 2, there simply isn't enough global liquidity to support Russia's needs, the country's FX needs, not individuals. Number 3, on-off ramps are by and large regulated financial institutions that have to abide by OFAC laws." Diving into number 2, our team took a look at the data behind this. As stated by the US Treasury Department, Russia conducts nearly $50 billion in FX transactions a day. As the largest crypto, Bitcoin's volume is usually between $20 to $50 billion a day. Russia's needs would encompass BTC and more. As of January 2022, you could only send around $200,000 worth of Russian rubles at a time through BTC on Binance versus $3.7 million through BTC USD and $2.9 million through BTC Euro on Bitstamp. If you were sending around $200,000 every minute, and assuming the BTC ruble market was resilient enough to immediately replenish the liquidity, very doubtful, you're nowhere near $50 billion a day. Also, the total average daily volume over the last month for BTC ruble has been just around $11 million. SWIFT is one part of the equation here. Banning some Russian banks from using SWIFT does complicate matters, but let's not forget that Russia has had ample time to prepare, setting up direct banking relationships in Asia and elsewhere to get around correspondence. US President Biden will also sign an executive order to regulate cryptocurrencies this week. The last Bitcoin growth impulse confirmed the break of the downtrend. The chart confidently rebounded from the former upper limit of the downward trading range. However, as before in March, a consolidation above the previous highs in the area of $45,000 is required to confirm a break in the trend. As Ethereum dropped to a 10-day low, traders started buying put options in anticipation of the second cryptocurrency falling to $2,200. On March 14th, the European Parliament will approve the final version of the bill on the regulation of cryptocurrencies, without wording that could be interpreted as a potential ban on Bitcoin mining. US President Biden will also sign an executive order to regulate cryptocurrencies this week. The focus may be on tracking transactions and preventing circumvention of US sanctions. The cost of Bitcoin in rubles has updated its historical highs, exceeding 5 million rubles. Bitcoin was not so expensive even in April and November 2021, when its price in dollars exceeded $60,000. In general, the benchmark cryptocurrency has jumped by 8.7% over the past day to 41,450. Ethereum has added 7.9% over the same time, and while other leading altcoins from the top 10 show growth from 3.3% XRP to 21% Terra. According to CoinMarketCap, the total capitalization of the crypto market grew by 6.9% over the day to $1.83 trillion. The dominance index jumped to 43%. The cryptocurrency fear and greed index rose 1 point to 22, remaining in extreme fear territory. Bitcoin was bought on the decline to $38,000, and the move to $40,000 on Wednesday morning caused a surge in buying, probably associated with the closing of part of the short positions, quickly bringing the rate to current values. The SEC versus Ripple case has seen 2 relevant rulings take place last week. Judge Annalisa Torres denied 2 motions: the individual defendant's motion to dismiss the case against them, and, more importantly, the SEC's motion to strike the fair notice defense. Attorney Jeremy Hogan, partner at the Orlando-based Hogan & Hogan law firm, shared his analysis on what he called a huge week for the XRP lawsuit. Ripple's fair notice could undermine SEC's future lawsuits. Attorney Hogan chose to focus his analysis on the SEC's failed motion to strike Ripple's fourth affirmative defense, as it is the more relevant for the outcome of the lawsuit, the future of XRP, Ripple, and even the crypto industry. The fair notice defense consists of putting the SEC's own actions on trial, including ex-SEC William Henman's 2018 speech where he said BTC and ETH were not securities. As expected, the SEC moved to strike this particular defense, arguing there was no legal basis for it, having filed the motion over 10 months ago. Magistrate Annalisa Torres has finally come to a decision on the matter and denied the SEC's motion. The fair notice survived. Jeremy Hogan stood by his own previous analysis in which he states that Ripple's argument that sales of XRP were not securities are stronger than its fair notice defense, but that the FND might be more important. He explained the US court system hierarchy, and that if Ripple wins on a fair notice defense, it becomes the persuasive authority for any crypto company the SEC sues from that point forward. If the fair notice defense survives and Ripple wins, the SEC will have an uphill battle winning any lawsuits they bring. Even if Ripple loses the FND, they can appeal the ruling, and if an appellate court determines Judge Torres was wrong and Ripple did not have fair notice, then the SEC is really in trouble because the ruling is binding on every crypto lawsuit that comes along. What court wants to know ahead of fair notice? The FND did survive, and now the SEC has really big problems, he said. Adding the order is so good that Ripple won not once, but twice, as he pointed to a footnote on the court's order. On that footnote, Judge Torres dismissed the SEC's request to consider the 75 previous enforcement actions in crypto-related lawsuits as fair notice. To the extent that the SEC urges the court to adopt this characterization of these enforcement actions, the court rejects such a suggestion because the report's analysis and conclusions with respect to these actions are not proper subjects for judicial notice. Moreover, to the extent that the SEC requests that the court parse each of these filings to determine the underlying facts and legal basis for the enforcement actions and draw conclusions that they are similar to the enforcement action taken against Ripple, the court declines to do so. In addition, Magistrate Torres pointed out what critical factors may weigh in a future summary judgment on the fair notice defense. If XRP was or not sold as an investment, and if Ripple has or not any relationship with the vast majority of XRP holders. Ripple denies both claims, and according to the court, it can make all the difference in terms of fair notice. If true, would raise legal questions as to whether Ripple had fair notice that the term investment contract covered its distribution of XRP, and the court may need to consider these questions more deeply. Jeremy Hogan then reminded that most XRP holders have no connection to Ripple, and many haven't heard of the company when they bought the digital asset. As to investment contract, the court will have to evaluate whether XRP moves in correlation to Ripple's activities, and as attorney Jeremy Hogan stated, XRP has been historically correlated with Bitcoin et al. In addition, the burden of proof is with the SEC. The expert discovery will have experts offering their analysis and claims that suit each party. If the judge can't figure out which is correct, Ripple wins, the attorney said. Now, is $1 realistic for XRP? Well, to be fair, it won't be the first time Ripple XRP surges above $1. The coin is coming out strongly after positive news in the SEC suit, but in previous trading sessions, XRP has been firmly rejected at 85 cents. The resistance has in fact proven quite hard for bulls to overcome in recent weeks. We believe that any rally above $1 can only come if XRP is able to sustain gains above that threshold. Right now, the coin was trading at 75 cents. Also, surging above $1 will now mean that XRP has risen above its 200-day EMA, which could trigger a decisive bullish run. But with a lot of pressure and short-term speculative trading right now, it will take a lot of persistence by bulls to edge above the $1 mark. Are investors buying Ripple XRP? For a long time, we have always known that Ripple XRP is a decent asset to buy, but the SEC issue was affecting investor sentiment towards the coin in a big way. Now that these issues have started to clear out, it is likely that the investors are also returning to XRP. After all, this is a big crypto project with the promise of superb long-term gains. It makes sense to own it as a part of your investment strategy. That's it for today, guys. We will see you next time. Until then.